Let's think this through. If you're going to make money overnight swing trading, well, you need to have a good idea what's going to happen tomorrow. If you're a good overnight swing trader, you could just flip a coin and go 50-50 on what might happen the next day, because if you're good, you'll be able to extend your gains and minimize your losses. So over time, you're a winner. Failing traders are often dealing with at least one, if not all three of these things. And the first thing is taking minimal gains and letting their losses run. Not only that, they'll double down on those losses, hoping that it'll all come back, which it usually does not. And number two is why number one happened. Failing to follow through with your plan, calling audibles, going with your gut feeling, trying something new on a whim. Those things are the wrong things to do. Stick with your plan, make adjustments over time as you learn, but not on a whim, not on a gut feeling. Stick to the plan. And number three is emotion. Emotion crushes traders. And so overnight swing trading can help minimize all three of those things. Like day trading, overnight swing trading is a high-risk approach to the market. But remember, high risk, high reward. With overnight swing trading, we're going for bigger moves. Remember this chart? If you invested starting in 1993 when SPY started, you invested in the morning and sold in the evening at the market close, by the end of all this time, you would be about even, if not maybe losing a little bit of money. However, if you bought at the end of the trading day and sold in the morning, you would be up over 600%. That means that the action is overnight. So that's what we're doing, playing the overnight gap. But if you notice something about that chart, it is only going one direction. It's going up, meaning you're buying and then selling the stock. And the market opened up during that time about 54% of the time. In other words, all you had to do is be right 54% of the time, which is better than flipping a coin, unless, of course, you're in a bear market. But what if you had a good sense of how the market might open the next day, improving those odds beyond 55%, maybe perhaps 60 or 70 or at times even 80%? You're probably going to make, well, probably a lot of money. A few years ago, I started playing with numbers and I began to see a correlation to how these numbers were either positive or negative and how the market opened the next day. And that was really exciting. That got me thinking, if I could do this and be, say, 60% correct and learn how to manage the wins and the losses well, over time, well, yeah, I'm going to have a pretty good retirement. To be fair, like day trading, it does take time to develop the necessary skills to be a really good overnight swing trader. It's easy to buy, but it's more important to learn how to sell well the next morning. I like day trading because it minimizes those factors that we're just talking about as it relates to failing traders. We're going for those bigger moves, and they're overnight swing trades, so we can't mess them up. We can't sell in the middle of the move. We buy at the end of the trading day and we sell in the morning. And of course, our skills come into play in the morning as we try to extend our gains or minimize our losses if the market doesn't go our way. Also, unlike day traders, we're not staring at the screen all morning or all day waiting for the right setup. We have a signal at the end of the trading day, and there are a number of different signals that we can use. We like the SPY tomorrow signal, which says up or down. And it can get more involved than that, which I'll show you in a few moments. But with the simple up or down signal, we know which direction to go, and then we buy our calls and our puts, and then we just wait until morning. Day traders do have one advantage, and that is the fact that they can place stops to protect themselves. If the market goes the wrong direction, well, they can stop out and try again. Overnight swing traders, we have one trade. And if it doesn't go our way, well, we use the SPY T trade to protect ourselves with a hedge. I have a number of videos on SPY T trades. I recommend you check them out. But just for clarity, the traditional SPY T trade is a 2-to-1 options ratio, meaning if our signal said up, we'd buy 2 calls to 1 put. I do like the free up or down signal on the front page of SPYtomorrow.com. However, just like in day trading or any kind of trading, there are different qualities of setups. In other words, there are higher and lower qualities of ups and downs, higher and lower pressure. So I like to break this down and take a look at different views, different algorithms to give me a sense. Are they all pointing in the same direction, or are they mixed? And how much is that pressure? And the nice thing is there is a correlation to the higher pressure versus success rates. So for example, I have a confidence number that goes from 1 to usually 16 to 18. And the thing is, when it's from 0 to 6, it's only about 66% correct, which is fine, and we can make money off of 66%, especially when we learn how to sell well in the morning. But even better, when it's 8 or above, it's 87% correct, which means I can decide on my position sizes. I can decide how aggressive I want to be in the trade based on the additional indicators for that up and down signal. And of course, some of the best trades are just not to trade. In other words, not putting money at risk that you don't need to lose just because you want to trade, because you want to be in the market all the time. Patience is really important. And that's why I developed another signal that I've been using, which basically says buy calls, buy puts, or pass. Don't trade. And basically that has to do with the level of confidence within the algorithms. So if you are out a few days, that's great. But when you're back in, you have a much higher chance of being correct and making money. So more days making money and less days losing and trying to make up for it, well, you're going to be ahead over the long term. There's absolutely nothing wrong with using the free tools. Just start off with smaller position sizes until you gain confidence in the tools that you're using. And you'll have a general comfort zone, a risk tolerance that is right for you. I like to be comfortable with my trades, so I focus on very specific ETFs and option expiration dates. I know how that price action generally works. I like to use the SPY, which my algorithms are based off of, in the QQQ and the IWM, and I use expirations generally 4 to 7 days out, longer over weekends and holidays. But the thing is, there are times in which the SPY really is not the right trade because the market is so flat, the volatility is down. So I'll look to the QQQ, and if it's really down like it's been, I'll go to the IWM, which has even more volatility. Now, if the IWM is not doing well, I start looking for stocks, and there are stocks with higher volatility, which allows for bigger moves, which gives us the opportunity for those big gains that we're looking for. I refer to my style of trading as SPY T trading, which has 3 parts. It's the overnight swing trade, buy at the end of the trading day, sell in the morning. And then I use a pressure signal, an algorithm which is based off of the SPY, S&P 500, which either says up or down. And of course, I have additional signals for those signals to give me confidence to understand what kind of position size or how aggressive I want to be. But with that, I still protect myself with the third thing, which is the hedge. And that's generally a 2-to-1 options ratio. Sometimes I go 3-to-1, sometimes I go a third. There's many different ways to approach SPY T trading. But the thing is, it's an overnight swing trade that keeps you away from the screen during the middle of the day when you have better things to do. It allows you to be active in the market at a high risk level for big risk, big reward scenarios. However, it's designed to minimize many of the big obstacles that we find with day trading, and the biggest one being emotion. I'll see you in the next video.